Okay. What is a bank?
Mom, a bank is where you can deposit money
Bank is where you can deposit money.
and
Yes.
take loans from.
And take loans as well. So a bank is a financial institution. Yes. Banks are financial institutions that help in money management. What is an institution? An institution is any established organization. A school can be an institution, for example. Right? So banks perform two functions majorly: primary functions and secondary functions. Okay. So what are the two primary functions of a bank? First is accepting deposits and the second one is giving loans. Right? So bank accepts deposits from people like us. Okay. We talked about bank accounts, right? We talked about savings accounts. We talked about RDs, FDs, money market deposit accounts, right? You deposit your money in a bank account. And in return, what does the bank do? They give you an interest on the amount that you have deposited, right? We understand that? The banks pay us some interest on the money that we put in. Similarly, you can also take a loan from a bank, right? An education loan, vehicle loan, home loan, whatever it is, right? You can borrow money from the bank as well. And in return, what is the bank going to do? The bank is going to charge some interest from you guys, right? Because they are lending money to you, so they'll charge some interest. So the difference between the interest earned and the interest paid is called the spread, and it is a major source of income for the banks. How do banks earn money? This is how. So what they do is the banks charge a higher interest rate on the loans that they give out. Okay. And they charge a lower interest rate on the savings account. So if we take a loan, so we'll have to pay a higher amount of interest rate to them. Okay. And the difference between them is the bank's income.
So technically, a loan is just the bank depositing money to you.
Yes.
And then they can take it after a long time and you will have to give them the interest.
Exactly. You will have to pay them interest and the interest rate is going to be a little on the higher end as compared to the interest that they are going to pay us if we are depositing in the money. Okay. So this is how banks earn profit. Okay. Interest earned minus interest paid. Interest earned is what? The interest
loan buyers pay.
Exactly. And what is interest paid, Dhruvin?
Interest paid is the money they give to us once we give the money to them. So it's basically.
Absolutely. Yes. The interest that they give to us when we put in money in the savings account, for example. Okay. What are the services offered by banks? First is check payments. We know what a check is, right? Who's going to define what a check is? Yes, Kalvit.
A check is a statement from you to the bank to give a specific amount of money, deposit a specific amount of money to another person, bank account.
Right. So it is a financial instrument which instructs a bank to pay a specified amount of money from one account to another account. Right? So this is a service that is provided by banks. We are understanding, Dhruvan? We understand what a check is?
Yes, ma'am.
Great. Next is a bank issues cards. Which cards do bank issues? Which are these cards we are talking about here?
Ma'am,
Yes, one by one. One card, Garvit.
Debit cards.
Debit card. Another
credit,
card, Jovan.
credit
Credit card.
cards.
Do you guys know any other card? Do we know any other card? First is debit card. Then we have credit card. We also have a card called a prepaid card. Starting from the first one, what is a debit card? Yes, Garvit.
A debit card is a form of payment which takes money directly from your bank account.
Perfect. What is a credit card, Dhruvin?
Ma'am, a credit card is basically a card which takes a loan from the bank. So it isn't linked to any account.
It is not linked to any account exactly. And you get a bill of your credit card every month, right? You have to pay the bill. Now, what is a prepaid card? As the name suggests, yes, Garvit.
As a guess, I think it is not linked to your bank account. It is like a debit card, but you pay money to it instead of depositing money in your bank.
Exactly. So a prepaid card is a card in which you load money beforehand. You don't necessarily have to have a bank account for it. You can go to the bank and get a prepaid card, pay the bank some money, how much you want in your prepaid card, and you can use it. So it's not credit, it's not exactly a debit card either because it's not linked to your bank account. It's not a credit card either because you are not taking a loan from the bank. It is sort of a gift card. We know what gift cards are, right? It has money preloaded in it and you can use it, right? So that is what a prepaid card is. Next is discounts on bills of exchange. Let's understand it with an example. Suppose I have to pay Garvit 10,000 rupees. Okay, you have a business. Okay, I bought something from you. Okay, now I have to pay you 10,000 rupees. You have a bill of yes,
10,000 rupees.
yes. There's a bill rupees 10,000 in which it is clearly mentioned that Anchal is going to pay back Garvit this much amount, let's just say in the next 3 months. Okay, now this bill will have Garvit's company's stamp or seal or whatever. Garvit ki company ki sari details are going to be on this bill. Okay, now Anchal has promised Garvit that she is going to pay him back in the next 3 months, right? But let's just say Garvit faces a financial emergency and he needs this 10,000 rupees immediately, right? Now he cannot come up to me really and ask me ki Anchal, please pay me before 3 months. I'll just straight up say no, that I have promised you already that I'll pay you at the end of 3 months and you're asking me beforehand and I cannot afford it. I'm sorry. Now Garvit cannot legally claim it from me, right? He cannot say ki no, I need those 10,000 rupees right now from you. He cannot do that because there's a legal document involved in which I'm promising that I'll pay him back in the next 3 months. So what Garvit can do is he can go to the bank. Just let me complete first. He'll go to the bank and what he'll do is he'll give them the bill. Okay, he'll show them the bill that, okay, I owe Anchal this much amount. Anchal owes me this much amount of money and I need it right now. So what the bank is going to do is the bank is going to deduct some charges from this 10,000 rupees. And whatever remains, let's just say the bank deducts 1,000 rupees and the bank will pay Garvit 9,000 rupees. Okay, and then now it is the responsibility of the bank to connect with me, Anchal, to get back that 10,000 rupees. So that is how discounting on bills of exchange work. So there's a bill. As a seller, you owe somebody owes you some money, but if you can't have it at the exact moment, you can go to the bank, you can get it in advance. So it happens before the due date, before the maturity period. In this example, what was the maturity period?
3 months.
3 months was the maturity period. So in case you need it before 3 months, you can go to the bank and get it discounted. Why discounted? Because the bank is going to charge some money, and the interest and the charges are pretty high.
Mom, I have a
Yes.
question.
Yes, Kevin.
Mom, so after whoever needs the money quickly for the emergency, so after they ask the bank for the money and after they pay them, so the person who was actually supposed to pay Garvit, so they're supposed to pay the bank now.
Yes, they are supposed to pay the bank now.
Oh, okay.
Understood?
Yeah.
All right. Next, we have advancement of loans. The banks gives out loans to public. Right? Easy, self-explanatory. Next, we have collect and pay credit instruments. For example, a credit card. Right? The banks, that is also a service provided by banks.